Thank you. Thank you everyone for attending this afternoon. And would you mind just going to the next slide? Thank you. So we just released this week a Q1 trading update in which we've announced that we've done around $195 million of revenue in the first quarter and adjusted EBITDA of a tad north of $21 million. And Centralnic is a major player in online marketing. So Q1 is normally the weakest quarter of the year. So expect future quarters with higher revenues going forward, which is also why the board has expressed its confidence that we will trade at least in line with market expectations, and which will also help us to further pay down the debt that the company has. So net debt has increased by roughly $8 million from the end of last year to the end of the first quarter. And that is before the background of us having purchased back 4 million sterling of shares in our inaugural and first share buyback. And those who follow our shares since some time know that Google is a very important partner to us. And now we've also been able to secure a contract with Microsoft Bing, which will now substantially diversify and deepen the advertiser demand pool and provide opportunities to acquire customers from a broader set of media. And so this is now the trading update. And one of the major challenges that Centralnic has is that probably the most frequently asked question is, great set of results, but what do we actually do? And this is why we've designed this new slide deck, which now allows a deeper look under the bonnet. And the purpose of Centralnic's online marketing division, which represents roughly 80% of the entire revenue of the group, is to help online consumers make informed choices. And we do this by creating consumer journeys that convert general interest media users into high conviction online consumers, which is something that many advertisers struggle with. And we engage with the customers by offering contact points on social media, publisher websites, search engines, by placing ads for rather broad categories. And you're going to see some examples in an explainer video that you will see in a minute. And we then educate the online consumer through easy to understand editorial and review websites where they learn everything they need to know for the purchasing decisions they're about to make. And because we've been able to partner with the world's leading aggregators, namely Google and Amazon, we always have commercial inventory at hand that very closely matches the consumer's intent. And last but not least, Centralnic is particularly good at this due to machine learning on billions of consumer interactions, which has provided us with superb insights into the human psychology of online consumers. And while this might sound quite abstract, we will now show to you on screen in a video how this actually looks like in real life.
Centralnic creates the online tools that connect the right sellers to the right buyers. Using machine learning built on billions of interactions with consumers, Centralnic gains insight into what people are looking for online. That means we can offer the best products or services to buy. So let's look at how it works. On social media, Centralnic places adverts for broad categories on websites, such as Facebook or TikTok. If the customer is interested, they click on the link. This takes them to an advertorial website, where they are further informed and choose a more specific category. The consumer then chooses from related search terms, so we can further understand their need. The consumer is then shown highly relevant adverts, before arriving on the vendor's website to make a purchase. With search engines, Centralnic places adverts for product categories on Google and other search engines. Due to the nature of our quality product reviews, Centralnic frequently appears high up in the search engine rankings. Once the consumer has clicked a link, they are presented with a choice of products to identify the best item for them. Here they can identify the best, most cost-effective, high quality and best-selling products. In the final stage of the journey, the consumer clicks through to the seller's website, where they complete the sale. Buyers love Centralnic because we give them choice. We inform them, and we have strong privacy settings, with no third-party data collected or shared. Sellers love Centralnic because, by paying us a fee for the referral, we direct highly relevant customers to their site.
While the two customer journeys that you just experienced on screen, the common denominator of both these approaches is that we create value for online consumers by guiding them through a purchasing process, make that they only see the most relevant ads or products, never see malicious ads or defective products. They always stay in control and are only being forwarded if they click into the intended spot. And at the end of the process, they have more information to make a confident purchasing choice. And we then capture this value that we create for the customers through our partnerships with merchants, who then appreciate the pre-informed, ready-to-act customers who convert more frequently and return less goods less often than through standard channels. They also appreciate that we increase the reach of the media outside the domain where they normally acquire customers from. And in return, they are very happy to pay us a fee for either the referral, as you've seen in the first model, or a commission for a complete transaction, as you have seen in the second customer journey archetype that happened in the video. So this is what we do in online marketing. And on the next slide, you see what we do in online presence. In online presence, we've basically got a two-pronged value proposition, which is that for suppliers of niche domains like .sk for Slovakia or newcomers like .xyz, we are an important and leading distribution channel. So they basically can sign up with us. And once they are signed up with us, they become automatically available to a broad array of resellers, which include the world's largest hosting companies like GoDaddy, Google, TeamBlue, WordPress, and many others, 250,000 end customers, and also large corporates who buy domain names in huge quantities to protect their trademarks like Mercedes-Benz, Johnson & Johnson, or Rolex. And again, on the customer side, from the customer perspective, the value proposition is for us to be a one-stop solution. So rather than integrating with hundreds and hundreds of different top-level domain providers, they only have to connect the systems to us. We make sure that all systems are always up to date at all times. And here we're then again a matchmaker. What is very interesting here is you can never own a domain name outright. You can only license it for annual increments, which makes this all subscription revenue that walks through the door year after year again. And also the customers are very sticky because it is quite non-trivial to move domain names from one provider to another. This is why on a global scale, only around 2% of customers change their provider each year, which makes this a very resilient business model. So now, having explained the purpose of these two businesses, the key question is, of course, first, how does this purpose translate into business success? And secondly, how does that business success then translate into financial success? And I'm handing over to our CFO, Billy Green, who will explain these two transformation steps to you. Thank you.
Thank you, Michael. So if we could move on to the next slide, please. So before we get to the absolute financial metrics of revenue and profitability, it's important that we indicate how we view and explain and track and measure the performance of the business. As with any business, especially one with a business model as innovative as ours, it's important that we explain the business not only in terms of financial metrics but also in terms of volume and value KPIs. So we subdivide and track the business according to the KPIs you can see on screen now. And in brief, in the online marketing segment, which is the largest segment of our business, we track our performance in respect of two main metrics. One of which is a price metric, the amount of revenue per 1,000 sessions, and as you'll see from this slide, between the years 2021 into 2022, that revenue metric grew 37%, which is a huge driver of the growth in our revenue and our profitability from 2021 into 2022. But not only that, not only is the revenue metric up, but in terms of the volume of visitor sessions, you'll see there was 76% growth in visitor sessions, and that indicates one of two things. Either the size of the market in total is increasing, which is of course good for us because it means more people are using the internet more, and that is something that we continue to see. But also it means that we're building and growing our market share within the available market. So there's two positive factors driving that extraordinary growth level of 76% on the online marketing side. Likewise, in the online presence segment, we consider average revenue per domain year to be the most relevant metric. So there was a positive movement between 2021 and 2022 in terms of the average revenue per domain year that we were extracting from our contracts. And then we track the number of domain years. And in terms of the volume of domain years, whilst we would obviously love to see that increase, we are not dissatisfied in a year when we choose to move away from higher volume, lower value business, and we choose to pivot towards higher quality business, to see a modest decrease of 2% in that market, and indeed the market as a whole contracted. So a modest decrease of 2% was a good performance there, and we will not be concerned if that's either stays flat or only grows by single digit this year. So those are the main KPI metrics we use. In terms of how that translates into external financial reporting, if we could look at the next slide, please. So when you've got such extraordinary growth, both in terms of price and on the online marketing side, volume metrics, that led to a significant increase in our revenue from 2021 to 2022, 77% growth, also 50% growth in what we refer to as net revenue, which a lot of people will know as gross profit. But those of you who have followed Centralnic for a number of years will know that strong revenue growth has been a consistent feature of Centralnic's story for many years now, ever since Centralnic IPO just over 9 years ago. One of the key factors that we're increasingly focusing on is how that revenue translates into bottom line profitability. So it's highly reassuring to me, having stepped into the CFO role in the group last year, to be overseeing a period in which not only did revenue grow 77% at a gross revenue level and 50% at a net revenue gross profit level, but also adjusted EBITDA grew 86% year on year, and the operating profit of the business, so unadjusted EBITDA, grew 172%. And it's that operating profit which gets you further down the P&L. That's where I really want to see the company continue to make progress, and we've continued to make progress already in the first quarter of 2023. It's by increasing that profitability and bottom line profitability and conversion into cash flow. You'll see there our adjusted cash flow also increased significantly year on year. Those are the most meaningful metrics to me in terms of building shareholder value and then being able to return shareholder value, which is a core part of the company's strategy. And that's where we can move on to next in terms of the strategy and the outlook, if I'll pass back over to Michael.
Thank you, Billy. And exactly the next question is, how do we intend to keep the ball rolling and have ever increasing both business KPIs and financial KPIs? And it is by attempting to keep create a virtuous circle rotating. So our first focus is on organic growth, winning new customers, launching new products, contracting with new suppliers. And this organic growth combined with our discipline on the cost side then leads to operating leverage. And we've already seen that that in 2021 we only spent in 2021 we still spent 61% of our gross profit on internal cost, whereas in 2022 we then spent only 52% of our gross profit of internal cost, meaning that we then converted 48% of gross profit into EBITDA. And this operating leverage then again helps us to obtain more competitive cost of capital. In the last year, there was already a major crystallization point of this promise, which is when we refinanced our bond that was carrying an interest margin of 7% over market rate. We were able to obtain bank debt at 2.75% over market rate, so in a reduction of the interest margin by more than 50%. And then again, this more competitive cost of capital then helps us continuing doing focused bolt-on M&A. However, in M&A, our promise is that we only do transactions which are instantly earnings enhancing. And secondly, every transaction that we're going to do going forward will be almost common sense how it fits into our business model, either enhancing one of our existing businesses or protecting one of our existing businesses. And that then again helps us to generate additional organic growth so that the virtuous circle starts all over again. Next and final slide before we are open for Q&A. All of you explained now where we went from questions, what do we actually do? How does what we do translate into business success? How does it translate financial success? The most important question, of course, why all of you are here, how does this actually benefit you as a shareholder? And because of the vast amounts of free cash flow that we generate, our free cash flow is more than 80% of EBITDA, typically after all taxes, interest payments, etc. And this is why we decided to start a progressive dividend policy. Our inaugural dividend of 1 pence per share was approved by the general meeting just this Monday, but it's to be understood as a progressive dividend policy. So this 1 pence per share represents roughly 6% of our last year's free cash flow. So there is ample of headroom for growth of this dividend policy. Then our second priority will still be investing into our organic growth. And here we have, while all our businesses are EBITDA positive, there are some opportunities. For example, taking this product comparison business that you've seen before, which currently only works in German-speaking countries, and take it into other countries. And you will see some progress on this just this year. And after that, we would then still continue accretive bolt-on M&A. And again, our promise is we would only do this M&A if the cash flow return on investment of that deal is higher than the dividend yield than the free cash flow yield of our share. And you will have seen that instantly after our appointment, Billy and I have concluded one transaction that even carries a cash flow return on investment of north of 20%, done in December last year. And once we exploited all opportunities to create shareholder value north of the implied free cash flow yield of Centralnic, we would then apply all other cash flow to share buybacks within the limits agreed with the banking pool. And so here we still have ample of headroom. Plus, the AGM has also approved an authority to buy back up to 28 million of our shares. So we are all set to continue our share buyback program later this year. And only when our net debt levels would again go up and approach the levels at the end of 2021, which we've now defined as the maximum threshold to which we would ever go, then we would deploy the cash that we have to actually paying down the debt. And this way we believe that we can square the circle and deliver all organic growth, earnings enhancement, and shareholder returns, and the leverage of the company in parallel. And with this summary or expectation management to what expect from owning Centralnic shares, I now conclude the presentation.